know you have a hold on the stock right now. You're looking at all different aspects within Disney, which obviously is sold off with the rest of the market. So you don't think it's a great buy right now. Why not?
You know, they're particularly impacted by this coronavirus with these park closures and the movie theater closures. Much of this year for them is going to depend on how fast they can get that cash cow back open and how much they can minimize the operating expenses for the parks while they're closed. You know, earning estimates are down significantly, probably about $4 a share for the year now, down from $5.50. So it's definitely a significant hit.
Right. We talk about Disney streaming, where people are looking at Hulu. I know you were looking at the whole group overall. So they don't have the theme parks. They don't have the movie theaters. I guess they're in part related to the cruises. They don't have cruises. So what do they have? Is it the streaming that's going to help them out?
Yeah, I mean, thank God that they pivoted to streaming when they did. This DTC unit is really going to be the growth story for them, and is really what's helping them, shy away from these parks closures. Disney Plus and Hulu are thriving in this environment. You had a Business Insider survey that was recently done that showed that Disney Plus was actually the #1 new streaming service that people were buying while they're sitting at home. Hulu was actually behind them at 21%, and far behind was Netflix. There's only so much Tiger King that people can watch.
And Netflix already has, obviously, serious penetration in the United States. The only growth probably is for Netflix is probably out of the country. Tuna, we're glad you're with us. Tuna Moby, Director, Senior Equity Strategist, CFRA Research, joining us. He has a buy rating on Disney. Why do you like Disney here at Tuna?
Well, thanks, and sorry for the technical issues. So I think Disney, if you look at the entire media landscape in this time of COVID-19, I think they've kind of held up relatively better than peers. Granted that, there's a number of businesses that will be disrupted as a result. All that being said, I think this is where their diversification really comes into play. The migration to a direct-to-consumer strategy arguably remains intact. I kind of heard the last segment where you're talking about the potential beneficiaries of this in-home streaming, of which I completely agree that Disney Plus is well positioned to become one of those major beneficiaries. So that should be a major bright spot. Obviously, the duration of the COVID-19 outbreak remains unknown. Disney's actually accessed the capital markets the last few weeks to the tune of north of $6 billion just to, tide them over the liquidity hurdle during these times. This is where the strong balance sheet they have the best balance sheet in the media industry should really serve them well to navigate this, treacherous COVID-19 waters.
Tuna, just a quick thought. I know you were talking about how Disney tapped into some new debt in the capital markets. Does that worry you?
This is the balance sheet is as solid as it can get. There's always some worry when you have a company like this kind of, access consecutive, issues and follow-on debt offerings. With that being said, over the years, I think they've really demonstrated disciplined financial management. I do believe that when things resume, that they will be as best positioned as any top investment grade company to rebound from this. So the one area that we're really worried about is the theme parks. That's really the biggest unknown right now.
Yes. Yeah, I understand. Brett, final thought. What do you think about the recovery? How quickly do you think it can all happen? I mean, what are you guys really looking at for a little bit of a comeback?
Yeah, I mean, they have great assets and a strong balance sheet, like the other guest said. And we do think that this is something that once the parks reopen and things get back to normal, that it will have a significant rebound. The assets that you're picking up from all the acquisitions that they've had over, the past 5 or 10 years are very cheap relative to history. And once these things get back open and Disney gets back on the right track, their DTC unit's going to be thriving. And, we think that it has a path to 175 over the past, or the next 3 to 5 years, really.